Hey YouTube, welcome back. My name is Patrick France, Senior Instructor here at VectorVest, and today we had the Fed speaking, finally giving their thoughts on what's going on in the market, and I'm going to recap it for you and give you some ideas of different industries, some certain stocks to look at to make money on the reopening and based off of what the Fed said. So if you want to get some good ideas on how to take advantage of the reopening of the economy, make sure to hit that like button, subscribe, turn on notifications so you get notified for future live content that we have coming out for you. And let's get into it. Just to recap exactly what the Fed was saying in their statements today is one, the labor market is not where they want it to be. They don't have maximum efficiency in the labor market. So the Fed is going to stay accommodative until they see the labor market meet maximum employment. Also, they said that currently they do see inflation. No surprise there. We see it on all the headlines recently. But at the same time, they're not too worried about it because it's mostly due to the industries that were most impacted by the COVID-19 lockdowns, and also due to bottlenecking that's been occurring on a short-term supply basis because more people are going out and spending money. It's like nobody thought that, once lockdowns finally came to an end and people started going out, that they were going to have a lot of pin-up buying pressure. And so all of a sudden we're now in supply shortages. Supply chains are having issues keeping up with the demand, and they didn't really prepare for it. So that's really the main driver behind the inflationary moves that we've seen recently, but can't fight the Fed, and the Fed thinks that that trend will dissipate over the next year, 2 years or so. So therefore, they plan on keeping rates where they are until at least the end of 2023. If they don't, they said they will let us know. They will announce their plan well before they get started. So hopefully that can ease a lot of investors' fears on what's going on, the current state of the economy, and allow things to get back on track and allow the markets to continue to climb. So with that being said, what do you personally think could be the best industry to take advantage of the reopening and the economy getting back on track and employment getting to where it should be? Let me know in the comments down below. While you're doing that, let's take a look at some of the ideas that I've thought about just watching the meeting and watching Fed Chairman Powell speak. So as you can see right now, I am in the industry viewer here inside of the VectorVest 7 software, and it's sorted by RT. So it's showing the hottest moving industries at this given time. So we see petroleum. Petroleum's been hot for quite a while, and I expect it to continue to move up over the next year at least, if not longer, just because with all the supply chain issues, they're going to have to be working overtime. They're going to be using more fuel, and therefore the price of gas and the price of oil will continue to climb, and to expect to see petroleum stocks really taking the lead from all this action that we have. So if we get into it, dive into the stocks inside the top industry, which is petroleum exploration and production, and automatically we can find the best stocks based on value, safety, and timing. So if you're a prudent investor, just simply using this list, looking at AOS, PDCE, RRC, AR could be some decent options. Now, if you're focused on a little bit more long-term, all we have to do is resort the list by RS, and we can instantly find the safest stocks out of the petroleum industry. So we have LNG, FANG, and once again, PDCE. Well, if you're looking for more of an aggressive play, look no further than sorting it by RV or relative value. This is the long-term price appreciation potential of the stock over the next 1 to 3 years. And here we see OAS once again, MPLX, CNX, and AR. So all of these would be good options to take a look at, or at least start putting on your watch list to keep an eye on. So if we get out of here, another industry that could definitely benefit from the reopening of the global economy is transportation shipping. With all the bottlenecks that have been going on in the supply chain over the last few months, with supply shortages, expect to see these guys working overtime and getting the products where they need to be and getting things back on track. So expect to see them making a lot more just for the fact that they're going to basically be playing catch up here. So out of this list, based off the VST, once again, that more prudent indicator, we have GSL, ZIM, SBLK, DSX. Well, long-term plays, we get AMKBY, MATX, CICOY, and GSL. What about more aggressive plays? We get MATX once again, AMKBY, also ZIM. So if you're looking for shippers to keep on your radar, those could definitely turn out to be some great plays in the near future. And now my third pick is going to be one that most people are probably familiar with it being 2021, and that's going to be retail. You could choose retail apparel, retail major chains. Any one of those two would definitely be a good opportunity. We'll just take a look at retail major chains here today. Here, based off VST, we get Target, Costco, Joann. Looking for long-term plays, not going to be changing too much since there's only 8 stocks in this list. But long-term plays, oh, there we go. We got Costco and TGT and also Walmart. So out of those, Costco, TGT, or Target, going to be the top 2 long-term plays. No surprise there, really. If we look for the more aggressive plays, let's see what we have here. We have Target and Costco once again. So out of the major retailers that could definitely benefit from more people going out, shopping, being out and about, Target, Costco, definitely the top of the list. If they're not on your radar already, they should definitely be so. And last but not least, let's get into the fourth industry that could really benefit the most from everything reopening. We're going to come down here and look for leisure, motels, and hotels. So with everybody going out, more people traveling, they're projecting the average American is going to be spending twice the amount on vacationing this summer than they have the last 2 years. So expect a huge push, especially for the hotels, places for people to stay as they travel. So expect to see that boost these companies or boost these hotels or motels up over the next few months, which could definitely lead to stronger earnings, which higher earnings leads to higher prices for the stock. So out of the hotel, motel, leisure industry, based off the VST, we have Red Rock Resort. And as we can see, just quickly going through it, it is overvalued currently, but it has average long-term potential, a little bit more risk, and this is really based off RT, so more of a momentum play. If we're looking for that longer-term one or the one that has the best fundamentals now that could really improve over the next 6 months, 12 months, year and a half, however long, starting off with Marriott Vacations, we can see right now, its price is at $168, values at $56.84. So you are paying a premium for this. Has poor long-term potential, but it has solid fundamentals. This means that they're consistently growing the earnings quarter over quarter, year over year. So this one may not outperform the market, but it's a safe bet to go into, especially if you're more of that conservative nature. Second option, Marriott International. Third option, China Lodging. Fourth option, CHH. Now, if you're looking for that short-term, more aggressive play, sorting it by RV, once again, we get Red Rock, we get ACCYY, or Accor SA, Core Point Lodging. These are all going to be more of the aggressive plays. Looking at it here, all of the RVs are below 1, telling us that this is more of a risky play. This is more of a speculative play, but if more people are traveling this summer, expect to see some big moves coming out of these. Nobody really seems to be talking about it right now, so these could be flying under the radar and creating good opportunities for you. Out of them, obviously the two that I would be personally looking at are going to be the Marriott International, Marriott Vacations. If we go ahead and just take a quick look at their graphs, as always, I like to look at charts. Charts are like a big picture of the stock, and as the saying goes, a picture's worth 1,000 words. So over the last year, let's go ahead and change this layout real quick for everybody. So over the last year, Marriott has actually been able to continue to outperform, move sideways up, move sideways up. Looking at earnings, earnings took a huge drop from 2020 coming into 2021, but a positive sign that we do see are earnings starting to pick back up here. So I know this isn't a perfect looking EPS line for what we typically like to look for, but we do see some positive signs on the short term that expectations are starting to grow, and we could see that move that price higher in the foreseeable future. So this one, I like what we're seeing with it. Nice steady rise from bottom left to upper right, smooth and consistent. Looking at VAC, same situation. Smooth rise from bottom left to upper right. Also, looking at EPS or earnings per share, starting to see that picking back up ever since about the end of the first quarter of this year, coming into right now. So this tells us analysts were very bearish on hotels and just in general during the lockdowns. Why? Because nobody was going out, nobody was traveling, didn't really need them. People were staying home. But now people are going and vacationing, people are going out and traveling more, and analysts' expectations seem to actually be improving for these stocks, but nobody seems to be talking about them quite yet. So these are the stocks I've got for you to help build your watch list of stocks that could really explode over the next 12 months, 18 months, for this foreseeable future at least, based off of what the Fed's expectations were with their plans that they've told everybody just today. So let me know your thoughts on these. Are some of these stocks you guys are already holding? If not, are you adding these stocks to your watch list? Let me know in the comments below, once again, what you think could possibly be one of the best industries to explode based off the reopening. So until next time, take care. Adios. Toodles.